As of this moment on Tuesday, March 24th, 2026, the market is currently open and active, and BigBear.ai, trading under the ticker BBAI on the New York Stock Exchange, is priced at $3.57 per share. We are seeing a slight intraday dip of approximately 0.28% from the previous close, with the stock oscillating within a narrow daily range between $3.50 and $3.71. This follows a somewhat volatile morning where early buying interest met significant resistance at the $3.65 level. While a fraction of a percent might seem like noise, for a high-beta AI play like BigBear.ai, this stability is actually the most interesting thing about it right now. Typically, when a company in this sector misses revenue expectations as sharply as they did in their recent fourth quarter report, you expect a waterfall sell-off. Instead, we are seeing the stock attempt to carve out a floor here in the mid-$3 range. The immediate reality that most retail investors are missing is that BigBear.ai has undergone a massive structural cleanup that hasn't yet been reflected in the trailing financial metrics. While the surface-level narrative is one of shrinking revenue, down nearly 38% year-over-year to $27.3 million in the last quarter, the internal mechanics tell a different story. They recently converted $125 million of convertible notes into equity. To the average observer, that looks like dilution, and in a literal sense, it is. But for the health of the company, it's a strategic masterstroke that essentially wiped a massive debt overhang off the books. This is why, despite the revenue miss, the stock hasn't completely collapsed into penny stock territory. The smart money is looking at a balance sheet that now holds over $460 million in cash and investments. They aren't just surviving, they are reloading. The common expectation for BigBear.ai has always been that it would ride the coattails of giants like Palantir or follow the meteoric rise of NVIDIA stock. Many entered this trade thinking that any company with .ai in the name would automatically print gains during this massive tech cycle. The reality, however, is that BigBear.ai is a different animal entirely. Unlike the broad-based platforms, BigBear operates in the gritty, highly regulated trenches of national security and defense. This means their revenue isn't smooth, it's lumpy. It depends on government budget cycles, a one big beautiful bill funding, and the slow-moving gears of the Department of Defense contracting. The disconnect between the AI hype and the defense reality is where the current tension lies. If you're looking for a smooth SaaS curve, you're in the wrong place. But if you're looking for a company that is deeply embedded in the mission-critical infrastructure of border security and battlefield intelligence, the current valuation starts to look like a massive mispricing. We've seen a lot of movement in the broader sector lately, and it's worth noting how BigBear.ai fits into the larger ecosystem of online investing. While many retail traders are using a Robinhood app or SoFi Invest to chase the latest momentum in Tesla stock or Apple stock, the institutional activity in BBAI has been quietly ramping up. We've seen significant stake increases from firms like Vanguard and UBS, who are clearly playing a longer game than the average day trader. These institutions aren't buying because of a tweet. They are buying because the company's 2026 guidance suggests a 17% revenue inflection. They are betting that the recent acquisitions, specifically Ask Sage and CargoSeer, will transform BigBear from a labor-for-hire consultant into a product-led software powerhouse. Ask Sage alone is expected to bring in $25 million in annual recurring revenue this year, which is a massive leap from where they were just 12 months ago. If you are managing your own individual brokerage account, or perhaps utilizing Schwab Intelligent Portfolios to diversify, you know that the small-cap AI space is a minefield. You need investment help that goes beyond just looking at a price chart. For BigBear.ai, the pivot to the Middle East and the expansion into customs management for ports and borders are the catalysts to watch. These aren't just theoretical AI use cases, they are signed partnerships, like the one with AD Ports Group. When you invest online, it's easy to get distracted by the volatility of the Robinhood crypto markets or the latest meme stock, but the real gains in the AI sector are going to come from companies that provide decision dominance in the physical world. BigBear's computer vision and predictive analytics are being used for weapon recognition and cargo movement, real-world applications that aren't going away regardless of what the Fed does with interest rates. Let's get into the nitty-gritty of the trading volume and institutional pressure. Today's volume is sitting around 220,000 shares so far, which is relatively light compared to their 50 million share average. This suggests that the sellers are exhausted. When a stock stops going down on bad news, it's usually because the only people left are the ones with high conviction. We've seen some insider selling recently, with director Pamela Braden offloading 80,000 shares, but it's important to keep perspective. She still holds over 500,000 shares. This wasn't a jump ship moment, it was a tactical liquidation. Meanwhile, the institutional inflows are outpacing outflows by a significant margin. If you're using Fidelity Wealth Management or a Fidelity brokerage account to track these metrics, you'll see that the smart money is effectively absorbing the retail panic. Before we move into the business model breakdown, I want to hear from you. Comment below how many shares of BigBear.ai you currently hold, or let me know if you're waiting for it to dip back towards that $3 support level before you jump in. Now, to understand where BigBear.ai is going, you have to understand where it came from. Founded in 2020 through a combination of several defense contractors, the company's core competency is taking massive, disorganized data streams and turning them into actionable intelligence. Think of them as the connective tissue for the military. Their business model has historically been heavily weighted towards government contracts, which provides a moat. It's very hard for a new startup to get the security clearances BigBear has, but it also creates a ceiling on growth. This is why the recent shift towards commercial SaaS and the acquisition of Sage is so important. They are trying to move away from being a service provider and towards being a product company. A product company gets higher multiples. A service company gets squeezed on margins. Currently, BigBear's margins are ugly, negative 230% net profit margin. But that's a trailing number. The forward-looking reality is a leaner, debt-free company with a $400 million backlog. When you look at investing sites or use a Fidelity mobile app to compare BigBear to its peers, the comparison to Palantir is inevitable. Palantir is the gold standard, but it's also trading at a massive premium. BigBear.ai is currently trading at a forward price-to-sales ratio that is a fraction of its larger rivals. This is the classic high-risk, high-reward setup. If they can execute on their 2026 revenue guidance of $135 million to $165 million, we are looking at a fundamental re-rating of the stock. The risk, of course, is that government contracts are notoriously fickle. If the current administration shifts its focus, or if there are further budget delays, BigBear could see another lumpy year. This is why self-investing requires a high degree of emotional control. You have to be able to sit through 4% daily swings without hitting the panic button on your SoFi active investing platform. Looking at the technicals, the stock is currently trading well below its 50-day and 200-day moving averages, which sit at $4.66 and $5.77 respectively. In technical analysis, that's a broken chart. However, the $3.50 to $3.71 zone has historically acted as a major area of interest. If BBAI can stabilize here and push back up above $4.50, it could trigger a massive short covering rally. Short interest has been a persistent headwind for this stock, and any positive surprise in the upcoming April 30th earnings call could be the spark that sets it off. If you're using an interactive brokers platform or the Fidelity trading platform, you can see that the options sentiment is moderately bearish, which is actually a contrarian's dream. When everyone is betting on a drop, it doesn't take much to create a vertical move to the upside. The macroeconomic environment is also playing a role. With geopolitical tensions remaining high, defense spending is one of the few areas of the budget that remains relatively safe. Whether it's border control or maritime security, demand for AI-driven surveillance is only increasing. BigBear.ai isn't just selling software, they are selling security. This is a far more resilient business model than many of the consumer AI companies that are currently flooding the market. For those of you utilizing Fidelity IRAs or looking at long-term holdings through Fidelity mutual funds, this is a speculative satellite position, not a core holding. It's the kind of stock that you buy with the understanding that it could double, or it could stay range-bound for another year. If you're comparing this to other opportunities,